Hi, my name is Diego Remus. I am recording this video in Canada on March 20, 2026 because this is about time that I come occupy this space again on YouTube, on the internet. And the reason is today is equinox. The word means equal night. Basically, on Earth we spin around an axis and also around the sun in an orbit that is not perfect. So 4 times in a year in a calendar there are moments when the positioning of the stars and the bodies in the sky change, and there are impacts on Earth. In the northern hemisphere, from today on, the days are going to be longer than the nights, and in the southern hemispheres, the nights are going to be longer than the days. This changes habits, how you wake up, what you do outside, outdoors. Changes crops, changes animal behavior, changes emotions in humans, and it's in a quarterly rhythm, very naturally, very physically rooted changes. What about today? What about today's equinox? Well, coincidentally, it's also New Year in Persian cultures. I'm talking about Iran, for example, where they should be celebrating. No, sir. But there is a war. Other places have wars too. Other places are in conflict. Some places were always in conflict. Some people were born into times of trouble, and that's the only season they have experienced. Some of us don't always appreciate, even notice some types of privileges that we have on a fundamental level. If you're not suffering from climatic disruption, this is also a privilege. We are living in very advanced times where exactly today the President of the United States of America launched or released or announced, made public a framework for policy related to artificial intelligence. Canada has a minister for artificial intelligence. Everyone on the internet, including on YouTube, is opinionated about artificial intelligence. Some are pro, some are against, some have doubts, some are embracing it, and everyone in a manner or another has been impacted already and will continue being more and more impacted. I don't mean negative impact, I said impact. There is an effect on how you live, how you do life. Not only since last year when the generative artificial intelligence became more popular. It's not just the chats and generating content. Artificial intelligence has been with us for longer. Surge pricing in flight algorithms and ride-sharing apps are just very direct and simple examples that we've noticed and we know about for a very long time already. As much as equinox and solstice that alternate throughout the quarters. Speaking of quarters, it means that we are past 20% of the days in a year. We're closer to 25% of the days in a year, right? At the end of March is the end of 3 months, and it's income tax season in so many countries, including Canada. And proportionally, it sort of represents that for most of us, everything, every dollar, every cent, every money that we've made so far is not even enough to cover the tax bill in a year, right? 20 to 25% is not the full weight of the average tax someone pays. It means we've worked and not taken any yet to keep for ourselves, but contributing. We are contributors. Some work as individual contributors, even if they're called team players or expected to be. We are seeing that the prices of equities or stocks in the financial markets are at a discount. For some, it's a pronounced discount, which again, for some is very good news. For some can be very bad news. And for some, in the words of Master Oogway from Kung Fu Panda, there are only news, not necessarily good, not necessarily bad. Now, again, this is about time. Time of what? Time for what? As a financial planner, the lesson is try and stick to the plan, because a plan is about your life, your cadence, your pace, your rhythm, your intentions, your time, which obviously cannot be disconnected from the cycles of either expansion or contraction of the general economy, or in geopolitics, or in the financial markets, or in any market. What's gonna happen with prices of groceries now that we're going into spring? It's known that things will bloom, blossom, flourish, grow. They'll spring forward, right? Doesn't mean abundance, and also prices decreasing, or at least not increasing as fast as they have done in the past half decade. More remarkably so since the pandemic stage of COVID-19. So the thing is not necessarily to time the market, right? Yes, there are opportunities that are time sensitive right now. They're immediate, instant, right? Well, it doesn't mean that today there is a very strong sunshine, even though it's the start of spring season here in the northern hemisphere. But then again, it also doesn't mean that the sun is not there. It is there. But also clouds are there. Also the fog is there. Humidity. Rain has fallen. Things are not static. There are always pieces in movement. We don't know if we are getting closer to the bottom of the prices, as much as we don't know when we are getting closer to the ceiling of prices. That's out of our control. Now, if we're going to make another conceptual analogy or metaphor, what springs forward in spring? Well, the bears come out, don't they? They've been hibernating in caves. So, with the prices being so low, it just means there is less people purchasing, less buyers. There have been more sellers, that's why prices go down. So it's a good time to buy. If you have a reserve, if you keep cash, if you have the bandwidth to accommodate for that. Now, are you going to buy anything just because it's cheap? Or do you have a somewhat clear list of things that you need, things that you like, things that you want when the price is right? So maybe now you will see, is now the price better? Does it justify? Because you don't have to do things that marketers want you to do, right? Oh, the price is low, so it means you have to buy that. Well, who said you have to buy that? The decision, the rationale, the reasoning, the thought process, the decision has to encompass, is that something I needed or wanted? Then, of course, you'd rather have it at a lower price than at a higher price. But that's not the reason you're buying it. You're not buying it just to sell it, like traders or intraday traders, because it's a season. It's a full quarter until we get to the solstice. It's roughly 6 months until next equinox on September 23rd. What does it have to do? Astronomy. Again, length of the daytime, warmth, conditions for staying outdoors and doing things, crops. What else? Tides, maybe? Those are a different cycle, but see, we only know if something is higher than another or lower than the other by comparing them one against the other. There's a field of practice and of science that is highly mathematical, and they call it econometry, where they measure things. There are also analysts in economics that are equity analysts or industry analysts. They will try and find fundamentals behind prices to see if they're justified or if there's an explanation or making sense of what's there to measure. And even though we have indices that aggregate several types of stocks, several types of equities, sometimes several types of industries or geographies in them, or some of them even try to encompass everything, the entire market. Yeah, there are even funds that track those indices, right? Even though these huge weighting systems exist and work in their way, we only measure things once against the other. But reality is not like that. We have things that change annually, things that change every 6 months, so it's semestral, things that change quarterly, things that change with the moon every 28 days. And most females on the planet feel that because it's related to fertility. It's very direct. And the thing is, you are one thing in the economy, you are one thing in a variety of markets. All of these markets are part of the economy. There is not a total economy that measures everything or encompasses everything. We are in a very globalized geopolitical web of relationships, and we don't know what's coming, we don't know what's staying, other than things that have been happening repeatedly, and again, it's like pendulum with motion, right? Oscillating from one side to the other because we have gravity. Gravity is a physical certainty on this planet because we have atmosphere. Things are pulled to the center of the earth, of the planet, and in big numbers, in things that happen too many times, averages also tend to come to the center. Things smooth out in quantity. Also, that's why we can zoom out of what's happening this month of March or this year so far, or this quarter, this cycle of the market where equities are coming down. And if we look at this from a distance, putting things in perspective, we know generally, broadly, equities are still going up. So having prices discounted for a while, for a few weeks, even for a few months, is not an anomaly. It's what prices do, and we only buy and sell things. We invest for the long term because prices change. If we didn't want prices to change, we wouldn't be doing that. So we want them to change. Oh, but we want to be in the right side. Well, there's always a side that is right for someone. If you're selling, you want to sell high, but if you're buying, you're going to buy low. So the price of today, when it's at the discount, it's party for too many people. And we cannot predict if more people are going to buy or more people are going to sell. And buy what, sell what. But every purchase is a sale, Every time someone buys something, they're buying it from someone who is selling it to them. We buy a stock from a company. No, we buy stock from the stockholder. It's not directly from the company. It's not the company buying it from us or selling it to us. It's called public markets because that stock doesn't belong to the company anymore. Once there is an initial public offering backed by some institutions like large banks, it means those banks already purchased at that first price where they priced the stock, and then they offered it publicly. So it's called the secondary market. We're not buying from the company anymore. You're not helping the companies you're buying from directly. Their market capitalization helps when they are doing valuations. If they need to finance, if they need to borrow money, for example, that's a very concrete and real effect or consequence or impact to them. That's why their leaders take care of the price of the stock, and sometimes they will even buy back to keep a bit of control on the overall financial engineering of the company. That's way beyond what we can foresee, because again, things happen in numbers, in big numbers, right? So you're gonna take your 1 million Canadian dollars cash that you have and buy something. Is that gonna impact the market? How many of us doing that amount will be necessary to mean something, to have an impact, to have an effect in the price, in the demand of things, and in the direction of any trends in pricing or stability? What if very large companies move billions, dozens of billions, all of the very large companies together? You think they're not doing it? You cannot out-trade them. You cannot outsmart them. Then again, if we're talking about time and space and being on the right side of the trade, remember, when we used analogic clocks, mechanical motion indicating the passing of time, even a broken clock that doesn't track time anymore, it's stopped, it's not working, it's not telling the time, it got stuck at a certain hour and minute. Even that broken clock that doesn't track time is going to tell the time correctly twice every day, which means you don't need to obsess with the present, with real time. if you are an investor, because you're doing it for the long run, which means you need, or you are favored with as long sequence of returns as possible. But we're talking about another year, another year, another year, another year, another cycle, you know? That's what compounds things. It's time, it's repetition of cycles. It's not the upside of one trade. Even though, of course, upside of one trade is not a bad thing. So we cannot even reach a fundamental decision that is good for everyone. Remember, if you want to optimize something, it means you're taking one aspect of that you want optimal for you at that time, not the other aspects, not the other things. That's a definition. That's not my advice, which I'm not offering any, just opening up how things add up. Optimizing means choosing one thing that you want to make better, not all things. If you are targeting in all directions, in all dimensions, at everything, you are not optimizing. You are doing something else, something different that is not optimizing. Optimizing is choosing one thing that you want to make better. So you're being partial by definition, and that's limited, constrained to that one circumstance. And every step of the road, every little thing, if you're looking to optimize, it means you are not looking at the bigger picture, at the view from above, the zoom out. You're not putting things in perspective. You're not seeing the forest. You're only looking at one tree. So how can that be good to you? Are you a slave to micromanaging and trying at every single trade or every single moment, everything, single opportunity, every single dollar, get the best out of? Do you think artificial intelligence, now that it's generative and conversational and even agentic, do you think that will do it for you? Don't you think it's been deployed already for years and years and years and years and years by the bigger players? Do you think they've been doing things looking at the sun or at the mechanical device, or they have already been using big data analysis, cross-referencing multiple sources in different scenarios of possibilities to determine at every big change that happens in reality that they can turn into a signal what the probability of certain future scenarios is going to be? You're going to do that and get a leg up on them who have been doing that for many years. because they also have the human factor on top of that. They also have hired the best economists and equity analysts. CFAs who are specialized in looking at fundamentals of companies, and quant analysts who are specialized in looking at technical graphs of the direction of prices, trying to get a description, prediction, and even a prescription for next step, taking into consideration the fundamentals that can be measured and the price movements, the patterns in those, and the human side, the behavioral part of it. Are we all scaredy cats right now? Are we afraid of the bears who are coming out hungry? If the height of prices in equities, which we've seen, the bull run, made things blossom and flourish, does it mean the fixed income people have been lacking a bit? And now they're coming for it? While central banks in North America have not increased the policy interest rate, will they keep it? That is going to depend on how they measure inflation. Inflation means increasing prices, right? So which prices are going to increase while equities are marked down, marked down, marked down, marked down, discounted? And it's not a price offered by a company, it's measured by the prices of the last trades that have happened. It's the real prices that were practiced. It's telling a story that people have been buying and selling at that price. It's not like a shop offering a discount on their television as a decision that next time they sell that item they will accept less. No, it's already a record that it had already happened at less. And many specialists, experts will try and tell you that they know what's going to happen with more likelihood. They're going to sell that. They are going to get you to make a decision. Well, even weather forecasts change intraday. You wake up and it's telling you it's gonna rain in the morning, then it doesn't, then okay, it changed to the afternoon, but it still doesn't, and then actually it's gonna be sunny today. It's like, yeah, it's already 3 p.m. we already know if it was gonna be a sunny day. So many times during the day or during the week or during the month or during a year, even weather cannot be forecast properly. Which depends mostly on movement of big bodies in the sky and humidity, pressure, radiation. In technicality, what can happen during solstice and equinox periods? Scratch that, solstice I'm not sure, but equinox I know. Satellites in orbit get a bit of downtime. Yeah, they get disrupted. Their transmission, their signal is not normal for a period of time. So this Friday, what can that happen? Will that delay trades? Or will that only delay updates in the weather forecast? Will that impact your Uber price? Who knows? Who knows? Is it going to make someone leave work earlier and not look at that business proposal you sent them? They're not gonna see your resume coming in, and then they're gonna stick with the idea of a decision that they had already discussed with someone else before, and consider that to be good enough.